So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 pips, rocking and rolling, 16th of October 2019. No trade calls, no recommendations, a response for their own stuff because we're here for educational purposes only. So, what's happening, guys? The market is comatose, wondering what to do, waiting for the next shoe to drop, and waiting for the next headline, right? So as I put out on the blog post, again, if you guys subscribe to these, I really recommend that you keep up with the blog posts because it'll help give some additional info to you. But basically, the other day was the lowest full volume, full trading day since December 2017, and the lowest SPY volume day since November 2017, right? Let that sink in, okay? So lowest volume full trading day since 2017 and lowest SPY volume day since November 2017, okay? So don't try and, even though the temptation may be to try to read too much into what's going on, there's absolutely nothing going on. There are a couple of retail traders getting slapped around and the machines got this, right? But the volume is really thin, so it's hard to read too much into that. Now, our base case here is that this is a low volume pump. So as usual on low volume pumps, as quickly as they ramp, they give back, right? So this could continue to go another 5 to 10% for all we know. But as long as it's a low volume ramp, they tend to give back as quickly, much quicker, in a fraction of the time that they take to ramp. Okay. The other thing to keep in mind is that we're waiting to see what's going to happen in Brexit. The key date is really going to be Saturday. So again, massive caution. If you're trading GPB, keep in mind that there is high possibility for a big gap up or down open on Sunday night. So you have to keep that risk in mind and trade accordingly and size your trades accordingly. Okay. So as we said here, ES, we're still grinding higher. I'm slightly net short here. We'll have to see what happens, but my base case here is unless we get a silly headline on these highs, slowly, even though we're going into OPEX, this is going to try and find some kind of resistance here. And even if we're going to go much higher, we'll first have to come in and fill this gap and then sustain higher from a lower level. Now, what's interesting to me with these shorts is that you can play with fairly tight risk reward. So say this is your risk, this is your reward. But if a headline hits, and we all know this trade deal is a BS deal, China's not reporting the same thing as the US is reporting. If things heat up in the Middle East, if things heat up in Washington, if things heat up with China, then this could have a lot more room to run. And that's why the risk reward is particularly interesting on this kind of trade. So even here, if you're short into this 3,000, right, and you're looking at it in terms of stops where you're wrong, if you get a daily close back above these recent highs, essentially you've got about 1% risk on the trade. Okay. Let's make it blue. You've got about 1% risk on the trade. But if you're looking at it for a move back down to fill those gaps, you're already looking at a 1 to 2 risk reward. And if this comes back and still stays in the choppy range, which we've been looking at, which is the 3,000 to the upside and 2,800 to the downside, that means you're risking 1% to make 6.5. Those are the kind of trades I particularly like. And if we get oh my god, things get ugly moment, and we test the 200 on the weekly or whatever, we're talking very big risk reward. So I particularly like these trades. It's not a necessarily super high odds trade, but I would definitely not be getting long here, even though the risk is of a little bit of a pump higher. Okay, that's what we're looking at in terms of the ES. The other thing, which is very, very interesting here is again is this DXY. If you remember, our base case was we called it for 98 to print before 100 prints, right? So the big interesting thing here is this just a little bit of a correction in the DXY, or is this the start of a much bigger move higher and this is a big top? So those that are looking for a correction are going to be looking for this to find some kind of support around the 98 and then take a stab much higher. So what that would imply is that essentially Euro USD longs are wrong, right? This coil back higher on some of the commodity currencies is wrong, right? But I still think that even if we move higher, ultimately we're going to puke back lower, because as we discussed, the strong dollar kills everything. And again, we're going into the Fed, and I think that even if the Fed does not cut, which they probably will, but even if they don't, we'll discuss this in the webinars today, but even if they don't, I think there's a good chance that Mnuchin and co and Trump are going to come in and intervene. So my base case here going into the end of the year and going into next year is still to short any kind of dollar rally. So I still like the long euro play, and so no change in that outlook. Now, speaking of currencies, just looking at this GBPUSD, so we discussed this even from last Wednesday, right, when I did the update, and I was pretty much getting long live while I was doing the update on cable here, right? That was a very, very nice move, right? Because you see that off even that basing, right? So if you, just to make this clear, so here we're trading on Wednesday, Tuesday, Monday, Friday, Thursday, Wednesday, right, into this gap up into those lows, right? So off that base, this is a nice little pump where it's about 3.5% pump. That's not peanuts. So here, if you're trading this, if you're on this trade, as I know a bunch of you guys are, I think the prudent thing is to take some off, to have taken some off into the 128. Okay, that's just prudent risk management. Now, I still think if we ultimately agree a deal, that 132 is in the cards, and if it's a particularly interesting deal, I would not be surprised to see the 138. So right here, what I would call is, in terms of targets, is that this is the interim target, which we've got hit. This is the primary target we are looking for, right? And this is the, let's call it the gravy target, or the cherry or the bonus target, whatever you want, right? So we'll have to see. But ideally, I would want to get 132 hit before the end of the week and hold for some kind of a gap up on Sunday for this to get hit. We'll have to wait and see. The trade management on this is always particularly tricky, because where do you put your stop? Because you can get a lot of volatility. My base case and the way I'm trading this is with very wide stops, being very, very aggressive on this setup, because my base case is still that if we don't, this is max no deal pain for now, unless you get a hard Brexit, really hard Brexit. So as long as this holds, I think it's all an unwind higher, right? If you want to be a little bit more conservative, you can trail your stops. You can put your stops to BE, or you can trail your stops below this low. But especially in the low liquidity chop and in the Sunday open, you have no idea what could happen if you can get taken out or not. So I would prefer to stay very wide with the stops, or even not necessarily have a stop in the system if you're holding over the weekend, but trade it small enough so that even if you calculate something like a disaster stop, which is a 500 pip gap up or gap down, it doesn't phase you, okay? That's the way I would be looking at that. Now, and again, it could be there are a lot of other interesting things playing out. So, but nothing much has changed, right? Nothing much has changed. All those moves are still trying to play out. And here you see, if people are unwinding risk from that out of GPB and out of Euro on that Brexit risk, what that would imply is that, again, this EURJPY still has a lot of room to run. Remember, we discussed this long idea too. And what I would say here is that that would be into the 200. So around the base cases into the 122s at least, right? Euro USD, this is still fully in play. Remember, this is not too shabby, this trade, right? With under 0.5% risk, and it's playing out quite nicely. We have to hold this 110, but really this has the potential, especially if we get some kind of resolution, to go back into that 112 at the very least. And remember, the 112 is like cable, the 132 is like our primary target, right? Anything more is going to be gravy. Now, the other thing people have been, somebody emailed me about is the RTY. And RTY is just stuck here, right? So you see how this is very, very neutral. We got a chance, if you remember, right here to sell the top end of the range. Then we came back in here, reversal candle. If you wanted to get long, you got a chance to buy the bottom end of the range. Right here, where are we? Well, we're pretty much in the middle with the 200 DMA being pivotal for Momo and flows, but there's very little edge here. So here, if you're long, you stay long. If you're flat, you could be looking to get short, right? Because you're saying, okay, this puppy's gonna break, and I'm gonna short this retracement in the 200 to get back short. And it makes sense because this is the weakest one of the currencies, but really, if that's the way you're looking at it, if you have to get short any kind of equity here or indice, I'd much prefer to short the ES here into these highs, because as we discussed earlier, right, the risk reward is much more interesting over here. Okay, so let me know if anybody has anything they want to discuss, but I think all our moves, all our charts are pretty much in play. I just wanted to do a quick update, but again, nothing huge to communicate. Have an awesome day, everybody. All the best. Bye-bye.